Hello and welcome everyone to the Gold and Silver Club end of week review for the 24th of January 2014, presented by myself, Phil Carr, and Nick Kalsi at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets, analysing the week's performance. The live session will cover an end of week summary for gold, silver, oil, natural gas and the commodity currencies. We'll be looking at the top trades of the week. We'll be covering live market commentary, correlations, technical analysis. We'll also be looking at key news in the week ahead and, of course, answering any questions you may have too. This week, gold price, let me move on to the fundamentals. We've had quite a lot of activity on the gold market this week, and gold price soared to a 2-month high on weak US economic data. So gold price soared on Thursday, hitting a 2-month high on weaker than expected US economic data, and sharp falls in the US dollar coincided with big losses in the US stock indexes, boosting safe haven demand for gold. Gold price surged just yesterday, up $26 to $1,266 an ounce and 40 cents within the first 2 hours of the New York opening, sending gold to its highest level since mid-November. Meanwhile, reports in Asia indicating the leader of the Indian National Congress Party, Sonia Gandhi, urged the government to loosen the nation's import restriction on gold, which helped fuel gold buying. So India has historically been the largest consumer of gold in the world until last year, when China took the lead position. Looking ahead to next week, traders will definitely be focusing their attention towards the much anticipated FOMC announcement, the first one of 2014, scheduled for the 28th and 29th of January next week. During the last FOMC policy meeting in December, the US Central Bank, they decided to cut its historic quantitative easing program by $10 billion to $75 a month, as gold prices continue to be directly linked to what happens in the US economy, and the recent weaker than expected US data could prompt the Fed to proceed with caution in tapering its quantitative easing program. The big question now will be whether the Fed will continue with tapering or put their plans on hold for now. So regardless of the outcome of this event, will certainly generate high levels of volatility for the US dollar and commodity prices, making that a very highly lucrative trading opportunity. So that's going to be next week on Wednesday, the FOMC meeting, and we'll cover that a little bit more detail towards the end of this webinar. Before we do so, my name's Phil Carr. I'm a professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world: gold, silver, oil, natural gas and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. Also responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders, and a regular contributor to a number of financial publications and speaker numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Kalsi, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, he discovered the formula, mindset and tools that give any individual the definitive edge to trade in any economy, and also writes for a number of global business and financial publications, and we've appeared frequently on financial television. So that is some background on ourselves and the Gold and Silver Club. So we'll move on and we'll be taking, first of all, we'll have a look at gold, we'll look at the top trades of the week, and we'll move on to live technical. So gold right now is trading at $1,259 an ounce. So we are still holding near to 2-month highs at the moment on gold. So we'll look at the technicals shortly and see what we can expect moving into next week and for the rest of the day. Before we do so, the top trades of the week using the Gold and Silver Club signature trading strategies. So the first trade that we had this week, which was highly lucrative, was gold, which put in a very clear top during the earlier part of this week, which provided a very good sell short opportunity from an entry of $1,251 an ounce, just down to a major support of 1,236 for 150 point gain. The risk on that was 50 points, so $500 for each lot traded for 150 points profit for $1,500 profit on each lot traded for a 3-to-1 on the 21st of January. Brent and WTI have been very lucrative trading opportunities this week, and natural gas, all the energies have broken out this week and provided a number of trading opportunities. These are some trades we actually took live on our live trading room as well. We had an entry here on Tuesday this week, the 22nd of January, entering at 107.20. We came out for a 2-to-1 profit target at 108.24 for 104 points. The risk on that, 50 points, so $500 risk for each lot traded for 104 points, so $1,040 profit for a 2-to-1. We then also triggered on WTI, again taken during our live trading room. This was a entry of 95.28, and we caught a 3-to-1 on this, came out at 96.57, at 129 points profit, 41 points risk on that, so $410 for each lot traded for 129 points, so $1,290 profit for a 3-to-1 on WTI. We also then saw natural gas breakout. We covered this in last week's webinar as well, this potential for a breakout above this major Fibonacci level. 4.50 was the Fibonacci level. We're continuing to see a breakout today. Actually, we've just reached new highs this morning. We'll take a look at that shortly. But the entry there was 4.50. We came out at 4.91. We've also got another trade still running on here. So we've got a profit here of 41 points, 20 points risk, $200 risk on that breakout, 41 points, $410 profit for each lot traded. So for a 2-to-1 risk to reward. Australian US dollar has continued to break down. In fact, it's breaking down this morning. It's reaching new 3-year lows just this morning. There's no end in sight for the Australian US dollar at the moment. There's some key fib levels just below, well, a little while further down. We'll take a look at that technically in a second, but this has been beautiful to just continue to short this week. We've got another short position on Australian US dollar. This is one of the ones where we day traded, took profits of 51 pips. The risk on that was 17 pips, so entry at 0.8842, exit 0.8791. The risk $170 for each lot for $510 profit for each lot for a nice 3-to-1. And those are our top 5 trades of the week. We've had plenty of trade opportunities this week. We hope you caught some good moves. If not, let's move across to the technicals and let's see what else is lining up for the day and as we move into next week. So first of all, we will take you across to the US dollar index. So the US dollar index, this is the US dollar index we've got at the moment. You can see this huge bearish candle here on the daily time frame. This is due to the economic data which came out yesterday. We saw the US dollar index tank, and that provided a spike in price for gold and silver as they move inversely to the US dollar index. We can see how exaggerated the move was here. We've taken out nearly all of the gains really from January just yesterday on the US dollar index, which took just about 10 days to actually get up to that level of resistance, only to give all the gains back in one day yesterday. So if we take a look at the weekly time frame of the US dollar index, looking bearish here, we've got some technical damage on the US dollar index at the moment. So we'll see how this fares as we move into next week. We are below a lot of all key moving averages now, which could we could see a further breakout here on gold if the US dollar index continues to fall and can't find support. We will take a look at gold next, actually. And before we do so, actually, we're just going to take a quick look at copper. Copper also didn't fare too well yesterday. We did see some negative China data come out of China midweek, which has caused, they are big consumers of copper, which has caused some technical damage here on copper. We can see we broke through major support just yesterday. We're coming down to some key moving averages. We're finding ourselves breaking the 50-day moving average and also another key level of support just this morning. So copper, if we look at weekly, we're continuing with this downward trend. We've been in a downward trending trend here with copper for the last month or so, since really the end of December, and this could we could see further pressure on that this week as well. If we move over to gold, gold is trying to work its way out of this downward trending channel that we've been in since August 2013. Where we are right now, the gold market is attacking this downward trending resistance channel. Now, if we look on the weekly, this is very interesting, because weekly for gold, we've got 4 hammers in a row now. 1, 2, 3, 4. So this is bullish for the market. We're trying to carve out a bottom on the market. We capitulated right at the end of the year. The first day of the of January, we had this capitulation, came down to 1182 on gold. We found some support here, and you can see just based on the weekly channel here, we're trying to break out above this downward trending channel. We're also finishing at the moment very strong. We're finishing near the weekly highs again, which if we can close with a strong hammer here on the weekly, we could be setting ourselves up for a strong move going into next week, particularly on the Sunday open. You can see we're really starting to carve out nice bottom here. So we'll see how that moves into next week. At the moment on the daily, we can see we did get on the 4 hour, we have had a little bit of pressure, a bit of take profit overnight here, but we're still holding at the moment on gold. It's still holding around 12. We're at 1260 at the moment. So gold still holding near 2-month highs. You can see actually we're getting a little bit of a spurt to the upside at the moment. So gold for me is going to be definitely one to watch. See if we can get a breakout. See if we can get above here yesterday's high as well. The next key levels for gold, and this will really should we start seeing a lot of buyers get interested. If we can get above 1276 as a key Fibonacci level for gold, and also 1306, and the 200-day moving average would take us around 1320 level. So that's what gold needs to do in terms of breakouts to the upside. Now, in contrast to this, Australian US dollar is tanking at the moment. We can see Australian US dollar just today. We've covered this a lot on our weekly live calls here, where we've been looking at technically on the monthly. Australian US dollar has been looking very bearish really since we had this huge inverse hammer going back to October, and we're now into January. We're just seeing a continuation of that on the monthly. The levels we're breaking at the moment, there's nothing really to support Australian US dollar until 0.85443. So we've at least here got about another 100-point move until we find any sort of major support here on Australian US dollar. We're finishing on the weekly lows, we're finishing on the monthly lows, we're finishing at 3-year lows here. So Australian US dollar looking very weak. It looks like it's not going to really stop today. I can't see it really getting much support until we can get down to that fib level at 0.85443, apart from profit taking from the shorts here. So we hope some of you are catching some of this short action. We are still remain short Australian US dollar, and we want to see if it's just it's breaking through 2 Fibonacci levels just overnight here. So we want to see if it can come down to 0.85443. So Australian US dollar, top pick really of the day to short. Silver at the moment, silver similar to copper, struggling. Normally we see silver and gold very strongly correlated. They are correlated, but at the moment we can see silver is finding more correlation with copper. Silver being more of an industrial metal as opposed to a safe haven metal. We are seeing there's pressure. We've got this downward trending trend channel, which unlike gold, silver is struggling to break out at the moment. So this is really capping the silver price at the moment. Gold might be able to pull silver out of this downward trend at the moment, but we're around about a whole cluster of moving averages here on silver. And for me, gold's going to be copper, Australian US dollar, and gold are the trades to be playing here at the moment, whilst silver just continues to consolidate. We need to break out this downward trend channel of silver. If we get any breaks to the downside, we're looking for a break of 19.6. If we get breakouts to the upside, we need to see silver clear 20.40 and get above 20.83 as well. So you can see this whole consolidation zone at the moment. So for me, gold's much more interesting than copper right now. but we'll see if we can get a breakout of this downward trending channel. As we move over to the energies, right, so the real star has been natural gas this week. So natural gas, nice breakout, and natural gas continuing to move to the upside here. Natural gas, due to a lot of the seasonality which we're seeing for natural gas, and also the winter freeze, particularly in the US, has caused a huge surge in demand for natural gas, and we've seen a big spike this week. We broke out of a key fib level of 4.500 this week, and we just continued. We're finishing here at the moment really at daily highs, at weekly highs, and also if we go back to the weekly chart, we are, just go back and zoom out a little bit further here, we are almost at 2-year highs here on the natural gas, so we're seeing a big spike to the upside. There's not too much to stop natural gas now, apart from profit taking. Get to the next key Fibonacci, which is 5.12, which would represent here in the region of around about another 17, 18 points or so to the upside. Depends how heavy you are in with your energy trades. But we don't see this market slowing down until it gets that next key fib level just above there. We may not get there today. It could be into next week. We might get a spike on the Sunday open. But certainly seasonality for natural gas, we are seeing a strong move here. We had the natural gas storage inventories come in yesterday, which were slightly bearish for natural gas. We did see a pullback in the afternoon profit taking, but the buying has resumed today. So we'll continue to look for breakouts here on natural gas. You can see the weekly time frame very strong here. We're finishing very strong for the week. So let's turn our eye over to WTI and Brent. These have been fantastic this week to trade the breakouts. We are seeing some profit taking now towards the end of the week, and we're starting to see some retracements. But we have had a great week just trading all these breakouts on both Brent and WTI. So let me move over to WTI. So WTI, we got a key breakout above 95 fib level this week. We rallied over 230 points to the upside. We've had some nice moves as we've managed to get above key Fibonacci levels and key moving averages. Now, we are getting some profit taking at the moment as we come towards the end of the week. You can see on the daily here, we broke through a key fib level again yesterday, and we're just getting a bit of profit taking. I'll be keeping an eye on this, how it closes for the week. And also, I'm really interested at the 4-hour time frames at the moment, just for day trade opportunities here as we come towards the end of the week. We've really made our money on the upward swings as we've had breakout after breakout after breakout. So we're just monitoring this to see where we're going to get our next key entry point. If I move over to Brent, we've had some really nice breakouts on Brent. We're getting quite a large pullback on Brent today, probably due to profit taking here as well. The crude oil inventories which came in yesterday, they were fairly neutral for Brent really. We just saw a continuation of the buying until late afternoon. Then we started to see some profit taking. We'll see how we close the candles for the week here. If we look at the weekly on Brent, we do have a large inverse hammer developing here on the weekly at the moment, but we'll see how oil fares during the US session today. Again, I'm going to be looking more for day trade opportunities based on the 4-hour time frame at the moment. So we're going to be monitoring that, but a lot of money has already been made on WTI and Brent this week. I would say at the moment, the markets really to follow today are going to be, we're going to be looking at Australian US dollar, which is continuing to break down to new lows, new 3-year lows. Definitely gold's going to be a top pick today. If we can break above yesterday's high, 1265, if we can clear above 1270, 1276 next key level, and above that we've got a large space between 1276 up to the 1300s. Definitely one to watch. Copper will be one to watch today if we get a break down towards the 200-day moving average. So for me, top picks, gold, Australian US dollar, and gold, Australian US dollar, copper, and also natural gas will be the ones to watch this afternoon. In terms of what we should be looking at into next week, let me go through the major news items that you want to be taking a look at next week. So in the week ahead, first of all, starting off next Monday, 27th of January, 3 p.m. GMT, 10 a.m. Eastern Time, you want to be keeping an eye out for the data which comes out in the US for the US new home sales. That measures the annualized number of single-family homes that were sold during the previous month. and that report tends to have more impact when it's released ahead of existing home sales because the reports are very tightly correlated. So a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Next Tuesday, the 28th of January, we have 3 p.m. GMT, 10 a.m. Eastern Time, US consumer confidence. Now that measures the level of consumer confidence in economic activity. It is a leading indicator as it can predict consumer spending, which plays a major role in overall economic activity. A higher reading points to high consumer optimism, and so a higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish for the US dollar. Particularly when you trade commodities, gold, silver especially, you really need to be looking at the US dollar index inverse correlation. You can see the US dollar index took out a lot of its gains for the month of January just yesterday based on a lot of poor economic data from the US, and gold and silver spiked and had over 260-point moves to the upside. So these news announcements are key for your commodity trading. Next Wednesday, the 29th of January, we have US crude oil inventories. So for those of you trading oil, definitely one for the diary as well. 3:30 p.m. GMT, 10:30 a.m. Eastern Time. This data reports the number of barrels of crude oil commercial firms have in inventory. Commercial firms report their inventory levels to the Energy Information Administration on a weekly basis. So a higher than expected reading should be taken as bearish for crude oil. A lower than expected reading should be taken as bullish. The big one next week, Wednesday the 29th of January. If you can only trade one announcement next week, this is the one you want to be trading. 7 p.m. GMT, 2 p.m. Eastern Time. We are going to be trading this Federal Reserve FOMC statement live with our traders. If you want to find out more about that, I'll give you some details towards the end, but this is the event that you can actually trade live with the Gold and Silver Club. So that is the primary tool the Federal Reserve used to communicate with traders. It contains the outcome of their vote on interest rates and other policies, along with commentary about the economic conditions that influence their votes. So if the Fed is hawkish about the inflationary outlook of the economy and rises the interest rates, that is viewed as bullish for the US dollar, while a dovish outlook is viewed as bearish for the US dollar. And don't forget where gold is at the moment. It's right at a key resistance level, downward trending resistance level. So next week on Wednesday, if we're at similar levels, we can either expect a breakout or a big sell-off. So it's going to provide a highly lucrative trade opportunity. Next Thursday, the 30th of January, we've got US initial jobless claims. The initial jobless claims report measures the number of people filing first-time claims for state unemployment insurance. It's a strong indicator of strength in the US labour market. That's 1:30 p.m. GMT, 8:30 a.m. Eastern Time. So a higher than expected reading should be taken as bearish for the US dollar. A lower than expected reading should be taken as bullish for the US dollar. And next Thursday, the 30th of January, we also, for your natural gas trades, we have the US natural gas storage. That's at 3:30 p.m. GMT, 10:30 a.m. Eastern. The Energy Information Administration provides natural gas storage report measuring the change in the number of cubic feet of natural gas held in underground storage during the past week. So while the US indicator, it is a US indicator, it does tend to have a greater impact on the CAD as well due to Canada's sizable energy sector. So we do see that correlation. Very tradable announcement too, which will be next Thursday at 3:30 p.m. GMT. So those are really the key news announcements you want for your diary in terms of commodity trading as we move into next week. If you would like to find out more about the live trading room, particularly how to trade the FOMC announcement live with the Gold and Silver Club, and find out more about joining our international trading community, exclusive members area, and how to trade with the Gold and Silver Club, you can request more information at the Gold and Silver Club live trading room programs at www.jointhegoldandsilverclub.com, or just go to our website to find out more information. If you would prefer, you can email us, office@thegoldandsilverclub.com, or call us at one of our international offices. You can call us at our London office at 0207 193 0403, our New York office at +1 646 808 0403, or our Johannesburg office, which is +27 11083 8403 to find out more. And of course, make sure you just take advantage of our newsletter. You will receive our free weekly report, and also you get invites to exclusive webinars that we are holding, and information on webinars like this, which we are holding today. So do take advantage of that. Okay, so details on the screen. We wish you all luck for today's trading and next week's trading, of course, particularly for the FOMC announcements. Thanks to FX Street and the team for all their work and putting on today's webinar. And we wish you a great weekend, okay? And we look forward to hear from you. Thanks, everybody. Take care.